All right, let's jump right in. Welcome to today's Explainer. Today, we are cracking open the U.S. tax code. We've got our hands on a series of highly effective, completely legal protocols designed to do one thing: keep your hard-earned money out of the hands of the IRS. We're using intel straight from a certified public accountant to break down exactly how you can navigate the system and keep your money right where it belongs, with you. So let me ask you this directly. Are you absolutely exhausted watching the system drain your income every single year? We all know the billionaires of the world use these crazy complex offshore entities and armies of tax attorneys to basically drop their tax bills to zero. But what about the rest of us? We don't have those kinds of resources, but you absolutely still need legal, accessible strategies to minimize what you owe. And to be clear, there are no shady illegal moves here. These are just legitimate, well-documented protocols that'll let you save money and still sleep perfectly well at night. Now, if you earn under this specific threshold, $400,000 a year, this explainer is literally tailored for you. Why that exact number? Well, because once you cross the $400,000 mark, and especially when you hit $1 million, the system starts getting, well, kind of wacky. You get into a lot of gray areas and hyper-complex tricks. But for the vast majority of us operating under that $400,000 cap, the protocols we're about to look at are your absolute most powerful tools to legally hack down that tax burden. Okay, here's our system menu for today. We're going to hit workplace and health exploits, then investment and crypto shields, and wrap up with some of the outlier tax glitches.
Starting with Stream 1, Workplace and Health Exploits. Let's look at the tax benefits hiding right under your nose.
Check this out. In our current system, you can actually spend up to $300 a month completely pre-tax just for commuting. I mean, that adds up to a massive $3,600 annual tax deduction. And no, it's not just for a traditional train or subway pass. You can use this on buses, ride-sharing apps like Uber or Lyft, parking meters, even parking garages and lots. If your workplace offers this, it's basically an immediate tax-free deduction you need to activate today. Next up, you've got to shield your income using standard workplace retirement protocols. If you're in the corporate for-profit world, you probably have a 401k. If you work in nonprofits or the government, you're looking at a 403b. By routing your money into these accounts, you instantly lower your taxable income for this current year. You're literally paying less in taxes right now, all while building up a massive reserve for your future. It's just a no-brainer for optimizing your finances. Now, let's compare health accounts. A high-deductible health plan unlocks an HSA or health savings account. Think of this like a permanent, super-powered savings account for your health. You put pre-tax money in, you spend it on medical expenses tax-free, and you can even invest it so it grows tax-free. And the best part? It never expires. On the flip side, we have the FSA, or Flexible Spending Account. It also uses pre-tax money for healthcare or dependent care, like preschools or nannies. But here is the crucial catch. The FSA has a super strict use-it-or-lose-it rule. If you hit year-end with leftover cash, the system just wipes it out, unless your company happens to offer a really rare rollover option. So choose your shield wisely. Moving right along to Stream 2. Investments and crypto. This is all about protecting your digital and traditional assets. So when you trade traditional stocks, your broker sends you a neat little package at the end of the year with all your losses recorded. But out in the digital frontier of crypto, exchanges often just don't send you a year-end tax form. This means if you're kind of lazy and don't manually report your crypto losses, you are willingly throwing away really valuable tax deductions. Believe it or not, losses actually serve a huge purpose in the system. They lower your overall taxable income. Don't let the lack of an automatic form stop you from claiming what's legally yours. And remember, patience literally pays off. If you can hold onto a stock or a crypto asset for more than a year before you sell it, you trigger the long-term capital gains rate. That puts your tax rate in half compared to the regular rate. Half! And it gets better. If your income falls under a certain threshold, your federal tax rate on those profits drops to 0%. That is 100% tax-free profit, just for waiting 366 days instead of 365. Pay close attention here because this is one of the most dangerous glitches you could encounter, the 1099B data log error. The 1099B is that year-end form you get from brokerages like Robinhood or Ameritrade. When you download it, you have to comb through it and look for missing data. If the system leaves the bought-for price blank, acting as if you bought the asset for literally $0, the IRS is going to automatically read your entire sale as 100% pure profit. You'll end up erroneously paying massive amounts of tax if you don't catch and fix that blank space.
All right, Stream 3, the outlier glitches. This is where we exploit some really niche system parameters.
Picture this. You hit a random jackpot at a casino, say a few $1,000 on a slot machine. The system immediately generates a W-2G form and alerts the IRS. Now, if you don't report it, you're definitely going to trigger an audit. But here is the strategy. You can legally chop down that taxable amount. How? By deducting all the money you lost on other table games, slots, horse racing, sports betting, you name it. You basically use your documented losers to offset your winners, which can entirely zero out your tax liability. And finally, we have the minimal rental use rule. If you list your personal home base on a platform like Airbnb, the standard protocol obviously says you owe taxes. But if you rent it out for exactly 14 days or less out of the entire year, the government cannot tax a single dollar of that income. It is 100% tax-free. You just have to make sure you report it properly using this specific rule. Otherwise, the system is just going to tax you by default. I'm going to leave you with this final quote straight from our CPA source. Enjoy the money, treat yourself out. Seriously, what are you going to do with your newly liberated credits? We've covered commuter benefits, health accounts, investment shields, and some wild niche glitches today. Make sure to like this explainer, subscribe to the channel, and hit that bell so you never miss a data drop. And I'll leave you with this one last thought. If the tax code is really just a giant rulebook, how many other rules are you missing out on simply because you haven't read them? Start claiming what's yours today.